for December 14th, 2011, and I'd like to go over something that I don't regularly go over as much, and it's how to use trend lines to predict the maximum high and low of the day, which you can use for profit targets, knowing when to get out of very good trades that you're in, and also how to look for counter trend trades at these levels. I like to draw trend lines over multiple days. I find the 30-minute, 60, and sometimes the 4-hour charts work well. And Control R brings up, once you click on the chart, Control R brings up our trend line tool, or you can just simply click the T and select the trend line tool. And basically you want to get as many areas on your chart to hit, the better. So start from the far end back. We're going down and hitting this. Trend lines are kind of, you don't want a trend line that's so steep like that. It's not likely to get hit. The 45-degree angle trend lines are the best. This is about 45 here, and you can see this is a little bit less than 45 degrees because I brought the top bar down a little bit. Once you do that, you right-click on the chart and hit Duplicate, and then you can drag it down to a previous swing low, and preferably one that hits yesterday's low is wonderful. It's very close to hitting this. It hits this. This is a little bit below it. Again, as long as it intersects as many points as possible, the better. And you might even drag it up a little bit so it hits this. So basically, at this area today, you're very likely to get a trend line reversal. Because it's taking the slope of the trend and projecting it from the swing lows, and from previous lows it went down and kind of went sideways and up, went down and up, went down and up, and so therefore you'll find this pattern frequently reverses. And you can see today, once it hit that trend line here at 54.12 or so, it's up almost 60 pips. A few more pips, it's up 60 pips. Now you wouldn't want to use a 30-minute chart for your entry signal, so bring down the toolbar, click on chart, we'll put on pound dollar. And I highly recommend using pips per bar chart, their range charts. So let's just use 6 pips per bar. Every time there's every time the price moves 6 pips, you're going to get a new bar. So we're going to hit OK, and this is going to take a while to download all the tick data. It's going to download a lot of tick data, and let's just make this chart a little bit bigger too. I'll fit it in the screen exactly here. 1280 pixels by 720, and once you have a chart up here, you can hit the Control key, Alt key, and your arrow keys to move it over 1 pixel at a time. So I'm going to line this thing up here, and then I'm going to put this on a different layer so that we can show and hide it when we go to other examples. And on your layers, you can click this in and they'll always show there, and I can make that disappear and back. If I want to label this, range chart, I can by just simply right-clicking on that chart, and now I know exactly what's on each layer. So down here at this level, we're looking for reversals, and typically I find that the first green bar you get underneath there, if you buy it when it goes 1 pip above there, you have your stop 1 or 2 pixels or 1 or 2 pips underneath the low. 6 pips per bar plus 2 pips of padding is 8. 2 or 3 pip spread, 4 pip spread. Your risk is under 11 or 12 pips. And once the market goes your way, normally you want to move your stop up. You might have gotten stopped out of this with a 4 pip, 5 pip loss, and then went long again here, and you can see it took off from 20 all the way up to 70. It's up 60 pips. And I find that anytime you do these counter trend trades, it always helps to have other tools on there as well. So just to add more clarification of this, containment bands. This is one of our better tools. It shows you the hourly moving average, and it also shows you your bands. The 1.5, 2, and 3 is what we use. I like to make the 2.0 band white, and the 3.0 band, which rarely ever gets hit, but when it does, there's about a 90% chance it's going to reverse probably in a few hours. This one was weak enough to hit and go through the red band. It wasn't quite at the white band. I would prefer this trade and would probably trade more lots if it was down here near the white band, because you're going to get a bigger bounce off of it. But the reason I add the containment bands is most of the time price will work its way back up to the hourly. So this is your profit target. It's all the way up here at 78. If it comes within a few pips of it, less than 10, 15 pips, you might want to get out. You also have your fibs off the high, the low to use as profit targets. And so if it's stalled at the first fib target or fib retracement level right here, you probably would want to exit half your trade and trail it on the other half. But this went right to the 50 and stalled. So we'd be out of half our trade, and our stop would probably be moved up a little bit here, probably underneath here. Give it a little bit more room. Keep in mind, once you're in a trade, it's the same thing like when you're first getting into it. How many more pips am I likely to make? It could go up here to the hourly and find resistance, and it could even get up here to 84, but it's not likely to go above here without pulling back first, and it may even resume its downtrend at these levels. So if you only have a few extra pips of potential, it's not worth giving back, more pips than what your potential is. If you only have another 10 pips of potential profit, don't give back more than 5 or 6 pips in order to get it. You always have to think of what your risk versus reward is. If it goes sideways right here for a while and doesn't go up, you would clearly want to move your stop up, underneath these bars right here and lock in more profit. But that's how you find this type of trade. Let's look at some other examples. Control R brings up the ray. Draw your trend line on here. And again, I want to have as many places get hit as possible. Here's the low. These areas are getting hit. It slightly went through it here. It hit it here. And then you right click on it and hit duplicate. And you can drag it up here to this level here. And you can see it came within a few pips of it. This is a method to give you an idea of an area where the price is likely to reverse. It doesn't always reverse at and above it. Sometimes it's a few measly pips, below it. This price right here is around 38, and the high of this bar was, the trend line is probably 2 pips above it. So don't let 2 pips prevent you from possibly catching, 10 to 30 pip a trade. Here's a dollar Swiss. We'll put that on this one. USD CHF, enter. It's going to download the tick data and generate a 6 pips per bar chart. Now this one did go up above the upper white bands, and sometimes you would put your stop a pip underneath the first red bar here with your stop a few pips above it, and every once in a while you're going to get stopped out on these trades. This one hit your entry level, and then it immediately reversed, and you would have lost 8 to 10 pips. And always be a little bit careful when that happens. I would wait for it to kind of go sideways right here, go short again right here. Keep your stop above the swing high by a pip or two. And this one got you in, kind of went a little bit against you, came back down. You want to move your stop down. And you're always aware that, it may be so strong it's not going to reverse. Here's a 38% retracement. We have the whole number right here. If I lost 10 pips and I got into this trade again at 15 and it pulled back and I'm up about 18, 19 pips, I probably would exit half the trade just by default to try to get that loss back. If I didn't have that loss, I probably would move my stop down to break even right here, and I still would have exited half the trade, but I would have, if I had a loss, I'm going to try to get more pips on the second half. If I didn't have a loss, I would probably move my stop down here and had exited both of these trades here. But sometimes it comes back up and double tops later, and usually when those trend lines get hit, price doesn't go above it later in the day. Here's a dollar CAD, which is another one that made a big move. Trend lines. Sometimes currencies shoot up so much that the trend line isn't always appropriate, but you don't want too much of an angle on there. So you right click on it, drag it off of the previous day's or the day after's high here, and it always helps again to have your Fibonacci profit target levels up here as well. Notice the 1.618 was the maximum high today. So basically at 1.404 up to 1.0420, it was likely to reverse. So we'll bring up the tick or range chart, dollar CAD. and we're looking to sell this from around 4 to 20. So here's the price earlier. Here's your first trade, and sometimes these don't reverse, immediately. And one thing we don't have on this chart is our FX Trend Pro. If the market's too strong, we really don't want to take this first trade. We want to kind of wait for the second one. So let's bring this up here and just take a look. You're kind of trading blind without having that. You have the FX Trend Pro on here. Oops. Sorry about that. And this is going to show you statistically how strong or weak it is at that time. So at that time, the first time it came up here, it was extremely strong. After this point right here, you can see the strength disappeared. So after about 9-10, you could look for a sell. So we wouldn't have taken this first trade, and it would have resulted into a loss because the market was so strong. A little bit after 9-10 or so, which let's click on it to find out what the time is. Here's 9:05. All right, here's 9:10. Because remember, this is not a time-based chart. You have the first red bar. You sell it when it breaks underneath here, and your stop's up here. And usually they work their way down to the hourly moving average eventually. But you might find a bunch of trades that you can take. You're short around 0.48. As soon as it goes down, you want to move your stop in half, and I like to move mine to break even. It comes down, and it is very close to this profit target here at 83. That's where your first profit target is. It got within 3 pips of there. So I probably would have had my finger on the trigger and got out of half at 15, locked in maybe 23 pips in the first half, and usually what I do is I put my stop underneath or above this bar's high here. Sometimes they go sideways for 2 or 3 bars and then lower. In this case, it came back up. Now again, I want to get short from 1.0404, and the ideal place is around 20, which is the 1.618 Fibonacci profit target. So this came back up here a little bit later. The first red bar, you go short. And this is around 10 o'clock. Let's look at the chart here at 10 o'clock and see. It wasn't off the chart strength as there was before. So I might have taken that trade. But as it pulled back, notice what happened here on the chart. It's pulling back. There's just no weakness. So if you're not likely to make that many pips and you have a chance to make 6, 7, 8 pips, you're better off taking it than giving away money. I mean, no one would pull out a $100 bill and burn it. So if even if you're trading one lot and you catch 10 pips and you're up $100, don't burn that $100 bill. At least exit half of your trade in the hopes of catching a little bit more pips later. Now, here's the ideal situation. When the market's going up here and it's kind of going sideways, and you can see the statistical strength, extreme strength, less, and insignificant here. At 11, a little bit before 11, it's pretty safe to look for a counter trend trade. It's much more likely to pull back now. So you have here, we also want to redraw our fibs. And, again, this is the first profit target. Here's the second, third, and fourth. It went your way and then a little bit against you. Whenever it goes sideways, you want to move yourself from above the high, knock it down, so you're risking maybe 4 or 5 pips here. And one last comment on this particular chart. If you're in this trade, usually you have 2 waves of counter trend moves. So this was the first wave, it retraced. This is your very high probability profit target. It's not likely to go below 76 without going back up. So if you're short this up here at 16, you probably want to get out of your trade here around 83. Over 25, 30 pip win in this case. Here's another example of a trend line, which I don't believe has reversed yet, but you can see how to use it. Again, I like to have as many areas get touched. If some of them go through, that's fine. And too steep of a slope, it's not likely to get hit. So this is looking decent. You duplicate it, and then drag it back somewhere around yesterday's and the day before's lows in order to get a feel for where to look for counter trend trades. So This one came down basically at 77.50, 77.46 and below. This currency is likely to reverse. If it's one of the weakest ones, which we'll know in a second, you don't want to be buying the weakest ones. Look, this was extremely weak. It was extremely weak here, and it was extremely weak here. So be cautious of that. You don't want to buy the absolute weakest of all the currencies. Our currency meter shows you that. So let's bring up the Australian yen on here. And you can set the number of pips per bar based on each currency's volatility. But we're looking to buy this pretty much underneath 77.40 or so. So here's 77.40. It's at the red containment bands. It's much safer to buy at the 1.5, I'm sorry, the 2.0 white band, which I said to begin the class with. And you can see, especially when they're super weak like this, it's much safer to buy here. And you also have the fib target off the last wave as a likely area. So from 27 down to about 15, it's a pretty decent place to buy this. Now here's your first, actually you might have got into a trade here, lost 10 pips, got back in it again here at 25, and you can see it went up 15 pips. It's probably pretty likely to continue up at least 38 to 50% of this last drop. So I would say 57 is a very good profit target. So you're likely to make, if you're in this trade right now, 10, 20, 30 pips. You might have got a 10 or 12 pip loss the first trade, or if you were using this at the time 11, it was extremely weak. You might not have gotten into this trade right here, coming up to 11. This is actually a 1, 2, 3 pattern. Once you see a currency's weak, it comes back up, and then on the way down, it doesn't break the lows. It's much safer to buy right here. This is the whole reason why we have our statistical trend tools, to make sure we don't have losses when the market's exceptionally weak. Doesn't make any sense. But today's class is a great example of how to use trend lines to find reversal areas. You draw the trend line like you normally would in the direction of the trend. If it's down, the trend line's off the bar's highs. If the trend's up, the bar's off the bar's lows. And then you just right-click on the chart and duplicate it. You can also, to end today's class with, use our trend channels, which does the exact same thing. And when you bring it out here, they automatically draw on there. And they also show you the midpoint, and it separates it in quadrants. As a trading system, you can use this. I'll do another video on this at some other day. As it's trending down, it's usually safe to sell in the upper quadrant, and you want to exit with profit targets in the lower quadrant.